What's up everyone, and welcome to another Bitcoin market update. In these videos you will learn how to use technical analysis to forecast price movements in your favorite cryptocurrencies like Bitcoin and others, and also see where we are looking to buy and sell these crypto assets ourselves. So let's get into it here with Bitcoin on the monthly time frame. If we're looking at this from a monthly perspective, you can see that we had an increase in bear volume over the last 2 months with a long-bodied bearish candlestick here in the month of May. Subsequently, since the monthly open, we've traded up since that point, typically because when you see a drawdown this significant from top to bottom over the course of 2 months, this was about 55% drawdown. So when you see drawdowns like that, those are typically buying opportunities for long-term investors, and that's probably what we're seeing right now with people buying the dip, is people thinking, this is a good time to long-term scale into position, even if we do go a bit lower on this monthly time frame before coming up and forming a monthly low somewhere down here above our $9,800 level. We know that this is still very cheap in comparison to the prices up here. So if we were to, for instance, buy right now and go up to the previous all-time high, that's about 67% increase alone. So even if you're a long-term investor, 67%, very significant. From a pivot standpoint, if we're looking at this from a pivot standpoint, you can see that the monthly is trying to hold the R1 pivot as a support level here. Now that we've closed below the R2, this could potentially end up being a resistance level for price on a retest. I imagine that it probably will be, just because it does kind of line up with this low here and the bottom of this candle here. So if we come up into this level, which we could easily see in the coming days, we see that that's at about 46,375. That will be our main resistance level. You can see we're attempting to bounce off of this weekly support level right here, this light blue zone. That light blue zone is from our bull trend back here when we had our low, high, higher low, and then higher high. This candle where people were selling their Bitcoin is going to be a support zone, because now people that see that we went higher and we're in a bull trend have an opportunity to buy this back lower, back where they initially sold it, which is what potentially people are doing right now. If we break this inside bar weekly candle right here up from last week at about 40,920, we'll likely go up to that R2, I would imagine, up here at about 46.2. So that's what we're looking at on the weekly time frame. If we go down to the lower time frames, like the 3-day, let's start with the 3-day. If you look at this from a 3-day perspective, something interesting here is this this gray zone right here lines up pretty nicely with that weekly pivot that we talked about, which is around 46,800. So it's right near the bottom of that gray zone. So if we come up to there, that will be pretty strong resistance zone on the first test, I would imagine, because this was our support level here, and now we've closed below it. So it typically will act as resistance on the first test. You can see that we did form a higher low here, which is the first step that we need on this time frame to change the trend back to the bulls. We need to see the 3-day candles close above this high. So we need to go up and form a higher high above this high right here from May 25th and have 2 candle closes above this key high. Then that will make this black candle a nice support zone for price. If we look at the RSI, we can see that we had the RSI at 34.59 here and then 34.06 here, making a lower low in the RSI, but price making a higher low. So this is actually what we would consider a hidden bullish divergence. So this is very interesting because typically when you see this, you'll see very good follow through, because this is the 3-day time frame. It's a pretty decently high time frame for crypto, at least. You'll see this play out and you'll see a pretty nice rise in price. So I wouldn't be surprised if we went up to at least the daily pivot here, which is up at about 42K. So looking decent for the bulls in that regard. That will also help with the breakout of this equilibrium pattern that we've been waiting to see play out, either break for a higher high or break for a lower low. Right now we've had 5 days of green in a row. Well, I mean, this day wasn't green, but you know, we've just been continuously going up for 5 days. We need to see a rise and close 2 candle closes above this key high for us to know that the trend has now changed back to the bull's favor. If you remember, if you recall correctly, we've went into a bear trend back here in May or early May. Subsequently, the bear trend has played out pretty significantly, and you know, we've seen significant downsides down to about 29,100. Now we have the potential for a bull trend to emerge, carrying us up to probably this light gray level, which is up here at about 47K. So if we do end up seeing that those 2 daily candle closes above this key high, that will give us confidence that this breakout will take us higher because of the consolidation here that we've seen. Let's go to lower term time frames like the 4-hour and see what we're dealing with here. On the 4-hour, we've kind of just been stair-stepping our way up. If we look at the way the price action has went, you know, we come down, up, higher low, higher high, higher low, higher high, higher low, higher high. And we've just been doing that as we've been going up here. So now our main support level on this time frame is this black candle right here. Whoops. So this is our main support level for price. If we're looking at the resistance level, we're actually operating within it right now, and that's this gray zone on the daily time frame from back here on February 7th. It's this candlestick right here. So we can see that this level, you know, we kind of played around with this level with closing below it, above it, back inside of it a ton of times until right here we closed below it, and now this is a resistance level for price. You can see that we're pushing into this level though, so if we do go above this level, you know, that will trigger people's stop losses that were going short on this level and playing this as a resistance level for price. So the other thing that you need to keep in mind when you have a dramatic drawdown like this and the market sentiment becomes very bearish, meaning that people are, you know, thinking that the price is going to continue to go down, is they will look at something like this price action and think, oh, we're just going to continue to keep going down. And when that happens is typically when the price stabilizes like this and then we go up to search for liquidity, which is stop losses that people have put that have went short. So there's stop losses above this high right here. And the way we know that is if we look at the volume, we can see this above average bear volume of people selling off of this high, meaning that the people that went short right here are putting their stop losses above this key high. And so if we go above that high, that will trigger stop losses for people that went short, causing them to buy back their positions at a higher price at a loss, and that will push the price even higher. So what you can see is sometimes a short squeeze, which is where a bunch of shorts are forced to close out their positions because the price is going up instead of down, which is what they wanted it to do, and that will drive the price up pretty quick. So we could see that in the coming days, and that would assist in this breakout along with the contraction that we've seen in the price action here. So on the 4-hour time frame, the last thing that I'll point out here is the potential that we've talked about for an edge-to-edge trade on the Ichimoku cloud indicator. So this cloud is pretty massive in terms of this indicator. Typically when you see a cloud like this, you're looking for what is considered an edge-to-edge trade, which is where you're taking a trade from one edge of the cloud with a target on the other edge of the cloud. So in this instance, the target for this is, you know, this edge of the cloud right here, depending on, you know, when we go up and hit that zone, if we do. So you can see that we had a potential for an edge-to-edge back here that I talked about taking, and I actually got stopped out on this candlestick when we closed back below it. And this is typical. I've seen this happen multiple times with Bitcoin on the edge-to-edge trades, where there's initially one that fakes you out initially, and then you go down from there. But then there's the real edge-to-edge, which is what we potentially could be getting right now, which is where we close inside of it right here. We come down again, but then we don't actually close back outside of the cloud. We actually have a bounce, and you can see that cloud traders right here price that in. As soon as we got this little candlestick right here, this one, you can see that that was a very bullish candlestick with buying volume after declining bear volume, and it was still inside of the cloud. So we were able to maintain multiple candle closes inside of the cloud, showing that we're indeed like in the cloud for a fair amount of time. And so then, you know, the edge to edge becomes more likely. So people felt more confident down here to enter the trade with their stop loss, you know, down below outside of the cloud, and then targeting the top of this cloud up here. So the target for this trade is, you know, likely it's going to take some time to get up there. So it's going to either be, you know, this level up here, which is up at about 43.5, and it starts to decline as we move further over horizontally. So it would be better for the bulls to see this go up quicker than take a long time to kind of get over, because then you're not going to get as much profit potential. It'll get somewhere in this range over here. Or worse, you know, right here, which is at like 40,300, which isn't very much of an increase from where we are now. So, you know, another way you can take this trade, another way that I'm thinking about taking this trade, since none of this is financial advice, is for educational purposes only, don't forget it, is this candlestick right here. So if we continue to come down a little bit and we draw down, one of the ways that I like to play this is I wait when we get these edge-to-edge trades for a support level to establish itself inside of the cloud, and then I go long off of that with my stop loss below that zone. And so now my risk reward changes dramatically, and you can see that this is a lot different of a lot, you know, more significant in terms of a risk to reward ratio than if we were to, you know, pull this down to the outside of the cloud, which changes it, basically cuts it in half, depending on where the price would close, probably somewhere down there. This is a 4.29, still a really good risk reward ratio. So I imagine that people will be buying on this candlestick if we get down to that level. But if we're using that level, and you're assuming that level should hold. Sorry, I end up clicking. Even if we turn this off, we can see very clearly what we have going on here. We had a bull trend here with a low right here, high, higher low, and then higher high. So now if we come down into this level, this is the zone that I will look to be a buyer on right there, and put my stop loss below that, which is a pretty tight stop. You can see it's about 1.47%, but that allows me to increase my position size. And then my target for that is, you know, the top of the cloud up here. And then, like I said, as it declines, the target gets lower and lower. But even if we were to get up to, you know, just like this level of the cloud, that's still like a ridiculously good risk reward, about a 7 risk reward. So that's last thing I wanted to note on the Bitcoin's price action right now. It's also pretty consistent with a potential short squeeze, as there's a lot of stop losses above these key highs right here. So we haven't wicked into any of these key highs, and that's an important fact to note if you're looking to go long. So that's all I got for this one, guys. If you like this video, give it a like down below and subscribe for future educational content around cryptocurrency and blockchain technology. And if you haven't already, check out our beginner technical analysis course that we just released on Leutheria.com. It's more comprehensive than these videos. You'll get more in terms of overall fundamental understanding when it comes to things like volume analysis, reading candlesticks, how to read trends and use that to make accurate buying and selling decisions on different cryptocurrencies like Bitcoin and others, and generate consistent profit. So check that out. We're currently running a 20% off discount where you can get 20% off that course. And until tomorrow, onward and upward.